Listen to me very carefully, because what we are seeing in the markets right now in 2026 is something that should make every sensible investor deeply uncomfortable. People look at the stock market reaching these incredible highs and they feel invincible. They think the party's never going to end. But I have been playing this game for over 70 years, and I can tell you with absolute certainty that the music always stops, and usually it stops without warning. Right now at Berkshire Hathaway, we are sitting on the largest pile of cash in the entire history of our company. We have sold massive portions of our largest holdings, including Apple, and we have retreated to the safety of short-term treasury bills. Why would the greatest compounding machine in American history suddenly stop buying and start hoarding cash? Because we are looking at an economic landscape that is flashing bright red warning signs. Inflation has deeply damaged the purchasing power of the middle class. Interest rates have fundamentally changed how businesses operate, and yet speculation is running wilder than ever. Today, I am going to explain exactly why I am terrified of the current market conditions and why the coming recession could wipe out millions of unprepared investors. But more importantly, I am going to tell you exactly how you can protect yourself and actually build generational wealth when the inevitable crash happens. If you want to survive what is coming, you need to understand the reality of 2026. Let us begin. Now, the first thing you have to understand is the psychology of a bubble. We are living in an era where people have completely forgotten what risk actually means. For the last decade or so, we had an environment of 0% interest rates. Money was essentially free. When money is free, people do incredibly stupid things with it. They invest in companies that have no earnings. They buy digital tokens that produce absolutely nothing. And they bid up the prices of real estate to levels that make no mathematical sense. But the world has changed. The Federal Reserve had to step in, and now the cost of capital is real again. Yet the market is still behaving like it is the middle of a massive boom. We are looking at a stock market where the valuations of a few massive tech companies are propping up the entire index. The price-to-earnings ratios are at levels that historically have only been seen right before massive catastrophic corrections. People are buying stocks today not because they want to own a piece of a wonderful business for the next 20 years, but because they think some greater fool is going to come along tomorrow and pay an even higher price for it. This is not investing. This is gambling. And let me tell you, when the tide goes out, you finally get to see who has been swimming naked. In 2026, there are a lot of people swimming completely naked. They are using borrowed money to buy overvalued assets. And when the margin calls start hitting, the panic will be absolute. I have seen this movie before. I saw it in the 1970s. I saw it in the dot-com crash of 2000. And I saw it in 2008. The names change and the technologies change, but human nature never changes. Greed always leads to excess, and excess always leads to a painful correction. This brings me to the strategy that we are currently executing, and the one that confuses so many amateur investors right now. The accumulation of cash. People always say, Warren, inflation is eating away at your cash. Why are you holding hundreds of billions of dollars in short-term treasuries? They say cash is trash. Well, let me give you a different perspective. Cash is not trash when it gives you the ultimate power of optionality. Cash is a call option with no expiration date, an option on every asset class in the world with no strike price. Right now, we are getting a decent yield on our cash just by sitting still, but the real value of that cash is not the yield. It is the ability to strike when blood is in the streets. Investing is a lot like baseball, but it is the greatest game in the world because there are no called strikes. You can stand at the plate and the pitcher can throw a tech stock at you at a crazy valuation, and you do not have to swing. He can throw a real estate deal at you and you do not have to swing. The umpire is never going to call you out. You can just stand there with your bat on your shoulder waiting for months or even years until you see a pitch that is exactly in your sweet spot. Right now in 2026, the pitches are terrible. Everything is overpriced. So we are standing at the plate with our bat on our shoulder, accumulating cash. When the recession hits and the panic starts, that is when the incredible pitches will come. Businesses that are fundamentally wonderful will suddenly go on sale for 50 cents on the dollar simply because people are terrified and need liquidity. If you are fully invested right now, or worse, if you are leveraged, you will be the one forced to sell at the bottom. But if you have cash, you will be the one buying up the best companies in the world at fire sale prices. This is how generational wealth is made. You do not make the big money buying when everyone else is buying. You make it by having the courage and the capital to buy when everyone else is screaming to get out. Let us talk about the real economy for a moment, because Wall Street is not Main Street. The stock market can stay irrational for a long time, but eventually gravity takes hold. Right now, we are seeing deep cracks in the foundation of the consumer economy. The average American is carrying record levels of credit card debt just to pay for groceries and gasoline. The pandemic savings are completely gone. Auto loan defaults are rising, and commercial real estate is facing a massive crisis as office buildings sit empty while their debt comes due. These are not minor issues. These are systemic vulnerabilities. When the average consumer has to choose between paying their mortgage and buying consumer goods, corporate earnings are going to collapse. It is simple math. You cannot have a booming stock market when the people who buy the products are completely tapped out. The government can try to print their way out of it. But we already saw that printing trillions of dollars just leads to massive inflation. They are caught in a trap. If they lower interest rates too fast, inflation comes roaring back. If they keep rates high, the economy grinds to a halt and we enter a severe recession. I am not a macroeconomic forecaster. I do not pretend to know exactly what day or month the crash will happen, but I do know how to read a balance sheet, and I know when risk levels are dangerously high. In my lifetime, the best defense against a recession has always been owning businesses that provide essential services. Companies that people rely on, whether the economy is booming or crashing. We like companies that have pricing power, meaning they can raise their prices to keep up with inflation without losing their customers. But right now, even those wonderful companies are priced to perfection. There is no margin of safety. And as an investor, the margin of safety is the only thing that protects you from a permanent loss of capital. If you buy a great business at a terrible price, it turns into a terrible investment. So we wait. We watch the storm clouds gathering and we prepare our umbrella. Most people are out there dancing in the rain thinking they will not get wet. They are going to catch a severe financial cold. Let us talk about the invisible thief that is robbing you blind right now in 2026. I am talking about inflation. Most people do not understand inflation because it does not come with a bill at the end of the month. It is a stealth tax. If you keep your money under a mattress while inflation is running at 5 or 6%, you are mathematically guaranteed to lose half your purchasing power in about a decade. People ask me all the time what the best hedge against inflation is. They think I am going to say gold or real estate or some digital currency. But the absolute best protection against inflation is your own earning power. If you are the best teacher in your city, or the best surgeon, or the best lawyer, people will always give you a fair share of what they produce in exchange for your services. The currency might change, but the value of your skills will remain constant. The second best protection is owning a wonderful business that does not require massive amounts of capital to operate, but can raise prices as the value of the dollar drops. Think about a brand like Coca-Cola. If a bottle of Coke costs $2 today and inflation drives the cost of everything up, they can charge $3 tomorrow and people will still buy it. They do not have to build new factories or buy expensive new equipment to generate that extra revenue. They just change the price tag. If you own shares in companies with that kind of pricing power, you are shielded from the worst effects of currency devaluation. But right now, people are fleeing to unproductive assets. They buy gold hoping someone else will pay more for it later. Gold has no utility. It does not produce anything. If you own an ounce of gold for 100 years, you will still just have an ounce of gold. If you own 100 acres of farmland, it will produce crops every single year. If you own an apartment building, it will produce rent every single month. In a recession, you want to own productive assets that generate cash flow, whether the economy is booming or crashing. Now, I want to address the psychological warfare you are going to face when the market finally turns. When the media starts screaming that the world is ending and the charts are all pointing straight down, your brain is going to tell you to sell everything and hide in a cave. You have to train yourself right now to ignore that instinct. Ben Graham taught me a concept back in the 1950s that changed my life. He said, you should imagine you have a business partner named Mr. Market. Every single day, Mr. Market comes to your door and offers to buy your share of the business or sell you his share. The thing about Mr. Market is that he is emotionally unstable. Some days he is wildly optimistic and he demands a ridiculously high price for his shares. Other days he is deeply depressed and he is willing to sell his shares to you for practically nothing. Your job as an investor is to take advantage of Mr. Market when he is depressed and completely ignore him when he is manic. Right now in 2026, Mr. Market is manic. He is offering you prices that make absolutely no sense. But when the recession hits, Mr. Market is going to become severely depressed. That is when you open your checkbook. I love it when the prices of stocks go down. If you eat hamburgers every day of your life and the price of hamburgers goes down, you do not cry. You are thrilled because you can buy more hamburgers for the same amount of money. If you are going to be a net buyer of stocks over the next 10 or 20 years, you should want the stock market to go down. You should welcome a bear market because it gives you the opportunity to accumulate wealth at a massive discount. The problem is that people check their portfolios every 5 minutes and they attach their personal happiness to the daily fluctuations of the stock market. You have to detach yourself emotionally. If you buy a farm, you do not check the price of the farm every day. You look at the crop yield. Treat your stocks the exact same way. So how do you actually prepare for what is coming? How do you position yourself so that you are not wiped out along with the speculators? The blueprint is incredibly simple, but very few people have the discipline to follow it. First, you absolutely must eliminate every single penny of high-interest debt. If you are carrying a balance on your credit card, you are essentially walking into a hurricane wearing a paper suit. The banks are going to crush you when liquidity dries up. I always tell students that if I borrowed money at 18% the way they do, I would be completely broke right now. Pay it off immediately. Second, you need to build that fortress of cash we talked about earlier. You need enough liquid capital to cover your expenses for at least a year. This is not money you invest. This is your psychological armor. When you know you can feed your family and pay your mortgage no matter what the stock market does, you make much better financial decisions. You do not panic when the market drops 20% because your daily survival does not depend on your stock portfolio. Third, you need to aggressively lower your standard of living right now. Stop trying to keep up with people who are financing a lifestyle they cannot afford. Cut out the subscription services you do not use. Stop financing new cars and realize that nobody actually cares what brand of clothes you wear. True wealth is the money you do not spend. Fourth, you need to start researching and making a list of the wonderful businesses you want to own. Look for companies with a durable competitive advantage, what I call a wide economic moat. Think of a castle surrounded by a deep moat that keeps the competitors away. Do the homework now while the market is calm. Figure out what these companies are truly worth. Then you write down the price you are willing to pay for them. And you wait. You wait with the patience of a sniper. And finally, for the 99% of you who do not have the time to analyze individual businesses, your strategy is even simpler. You wait for the market to crash and then you start buying a low-cost S&P 500 index fund consistently every single month. You buy when it goes down, you buy when it goes down further. And you never panic sell. Over the last 250 years, there has never been a better bet than betting on the American economy. The American tailwind has not stopped. The economy will recover just like it always has. And the people who bought at the bottom will experience life-changing wealth when the next bull market begins. Before we finish, I want to leave you with a reality check about human nature. The greatest transfer of wealth in history always happens during periods of extreme economic distress. The middle class gets wiped out because they panic and sell their assets to the wealthy at a massive discount. It happens in every single recession. The people who are over-leveraged and completely unprepared are forced to liquidate everything they own just to survive. And the people who have been patient and accumulated cash step in and buy those assets for pennies on the dollar. I am telling you all of this because I do not want you to be on the wrong side of that transaction. You have the power to choose right now whether you will be a victim of the coming recession or a beneficiary of it. It all comes down to the habits you practice today. The stock market is not a casino. It is a mechanism for transferring wealth from the impatient to the patient. If you are constantly checking your phone and reacting to the daily news cycle, you are going to lose. But if you zoom out and focus on the next 10 or 20 years, you are going to win. The decisions you make over the next 12 months will dictate your financial reality for the next decade. Do not let the fearmongers on television paralyze you. But do not let the reckless speculators convince you that the rules of math no longer apply. Stay disciplined. Stay rational. And remember that true wealth is built quietly over time, not overnight. Start building your cash reserves. Kill your toxic debt. And get your shopping list ready for when the inevitable crash finally arrives. I have lived through more than a dozen recessions in my lifetime, and every single time the people who panicked lost everything, while the people who stuck to their principles built fortunes. You do not need to be a genius to survive what is coming in 2026. You just need to control your emotions, control your spending, and let time do the heavy lifting. The opportunity of a lifetime is coming for those who are prepared. Do not waste it by being impatient. History shows us that the American economic engine always restarts, and when it does, the people who held their ground will reap the rewards for generations. The choice of where you stand is entirely yours.